welcome to today's class. Today we are going to see trial balance under accountancy and bookkeeping. Alright. Now, what is trial balance? Guys, understand it is just a list. It is a list of all ledger balances. That's it. So we know what is meant by journal. We know what is meant by ledger. We have seen in our earlier videos, right? So once you have the document, once the transaction has happened, first you will secure the documents. Then based on the documents, you will pass what? Journal entry. Once you pass journal entries, from there you will post it to what? Ledger. So you will open all the accounts, the ledger accounts for all the transactions. Then you start posting the corresponding transactions, right? Then at the year end, you will try to balance it out, all the ledger accounts, correct? Now, from there, each ledger, you will take out the closing balances and you will put it in one place. All right, you will put it in what? One place, and that is called as trial balance. See here, it's a list of all general ledger accounts, both what? Revenue and capital. It could be of any nature, revenue nature or capital nature, contained in the ledger of business. And see here, it's a bookkeeping worksheet in which balances of ledgers are compiled into what? Debit and credit account column totals that are equal. Guys, understand? Whatever the ledger balances, all the accounts called ledger balances will be carried and you will put it in one sheet, consolidated sheet. And if it has a debit balance, you will put it under debit column. If it has a credit balance, and you will park it under credit column. That's it. In the trial balance, you will park it either debit or credit based on the balances of that particular ledgers. All right. And now, once you put everything, or at the end of the trial balance, if you total it up, all the debits and credits, it will match and it should match. That is the reason we are preparing it, whether we have accounted everything, is there any error, whether any of the accounts are omitted, any of the transactions are omitted, any of the entries are omitted, or is there any mistakes, any error, we can find out from that if we couldn't tally what? Trial balance. If the trial balance, both debits and credits should be equal or it should match. If it is not equal or if it is not matching, then we have made some mistakes in our accounting entries or we didn't post some of the entries in our book. So we have to go back and check. So it serves as a verification method also, or serves as a checking our accuracy also. All right. Usually trial balance will be prepared periodically, and at the end of every financial year or reporting period, the first step to prepare your final accounts is what? Trial balance. Based on the trial balance only, we will prepare our final accounts. All right. So first thing what we will do, once the transaction happen, we will pass the journal. From the journal, it will go to ledger, and the ledger ka closing balances will be transferred or will be put on one, and that list is called as trial balance. All right. Now we will see whether do we have any formats for the same, or how to enter all those things now. All right. Here I have given the steps, the accounting cycle steps. This we have seen in our previous videos also. First, transactions, documentation, journal, ledger, trial balance, and the financial statement. So we are in this portion now. All right. So now shall we see this? Because journal and ledger we have already seen in our earlier videos. Now, what are the types of trial balance? Do we have any types? Yes, we do have unadjusted, adjusted, and post-closing trial balance. Guys, all are same only. Trial balance is a trial balance. It's a list of balances of your ledgers. That's it. What is meant by unadjusted, adjusted? I told you, the raw trial balance. Once you put every balances without any adjustment entries, if you prepare a trial balance, it is called unadjusted, without any adjustments, which means just whatever it is there, first you are preparing, raw. That is called unadjusted trial balance. After that, you will have some information, you have some adjustments to be made, you have to make some provisions, or you have to adjust for some errors. Then once you corrected everything, you are preparing, then that is called as adjusted trial balance. Then what is post-closing, guys? after preparing your financial statements, like all the expenses and incomes are transferred to your trading and P&L, and you prepared everything, then after that, from the balances or from the balance sheet, you will prepare what? A trial balance. That is called post closing trial balance. Once everything is done, once everything is prepared, from the prepared final statements, if you prepare a trial balance, then that is called what? Post closing trial balance. We'll see, guys, in the next slide we will see how the what is meant by post closing trial balance. Because why I'm stressing there is, see, understand, unadjusted and adjusted both are similar in the sense, only difference here is without any adjustment, first hand information you prepared on trial balance without any adjustments, then that is called unadjusted trial balance. And after having adjusted, which means you pass some adjustment entries, you pass some rectification entries, corrected entries, and you will prepare exact trial balance which should be used for your financial statements, preparation of your financial statements. Then that trial balance is called adjusted. So these two things are before preparation of what? Financial statements. But the last one is post closing, is after the preparation of financial statements. Now we'll see the format. This is the format of trial balance, guys. See here, trial balance. What are the heads of accounts? The ledger accounts, it will come here. What are the ledger folio number? Debits and credit. That's it. So trial balance as on which date? 31st March 2020, 31st March 2021. Like that here, salaries account, whatever accounts you have, you put it here. If it is having debit balance, debit balance. If it is having credit balance, so credit balance. This is the format. All right. Here I have given an example for your trial balance. We will try to solve it. The following were extracted from the ledger of Rahul on 31st March. You are required to prepare a trial balance. Salaries, sales. Guys, understand, salaries and all will have debit balance. Why? Because this is an expense. All right. So how it is expense and all, we have explained in our previous video itself. All right. So this will have a debit balance. Sales is an income, so it will have a credit balance. Plant and machinery asset, debit balance. Commission paid, debit balance. Opening stock, debit balance. Repairs, debit balance, because expenses, sundry expenses, debit balance. Return inwards means whatever you sold, that has come back. So what happens? It will be reduced from your sales, or it has to be shown in the debit side, because it has come back. It is not your income, it has come back. Discount allowed, again expense. Rent and rates, again expense, debit. Purchases, again it's an expense, debit. Sundry debtors, asset, so it is debit. Traveling expenses, debit. Carriage inwards means transportation cost, again debit. Sundry creditors, it's a liability to us, so it is credit. Capital, it will be owner's account, so it will be credit. Drawings, it is a amount withdrawn from the company for the personal purposes, so it has to be debited from the capital account. Cash at bank at assets, so it will be having a debit balance. Return outwards, which means whatever we purchased, we have sent it back to the supplier due to maybe any error, or any, not error, maybe it is damaged or something. So it expense is reduced to the extent of what? 400. So it has to be credited. Investments, again it is asset, it will be having a debit balance. So I put all the debit and credit balances. Now let me prepare a trial balance here. That's it. See here, salaries, I put all the ledgers here. I put salary, the amount 36,320. Why? Because nominal account, I have given you the reason. Guys, understand, your format ends here. This is the reason why I debited, why I credited. For your understanding, I have given here. All right. So your format ends here itself. It will have serial number, name of the account, ledger folio, debit and credit. That's it. This one I have given you for your understanding. That's it. All right. Now salaries 36,000 debit. See why I debited? Because nominal account, expense. Sales, it has to have a credit balance. Guys, once I know which one is debit and credit, I just need to put all the figures on the respective columns. Debit and credit, debit and credit, debit and credit. All right. Once you put like that, now if you total it up, definitely if everything is correct, it will match. Debit will be equal to your credit. It should match, it must match. So debit is equal to credits. It will match. Then you have done correct. All right. So I have given the examples here, guys. I have not examples, sorry. I have given the reasons why I have debit, why it has credit. All right. I request you to go through, because if you remember our golden rules of accounting, what we have done in the earlier videos, you may easily catch up on this. All right. So trial balance is nothing but once you have the ledger ka balances, you park everything in where? In one sheet. Then that is called trial balance. Guys, understand. I'm going back to the question here. See, this is the ledger balances. This is the ledger. See here the word were extracted from the ledger. So these are all the ledger balances. So it is very simple. From the ledger balances, you are parking it in one sheet, one place where you are putting all debit balances and credit balances. Now you may ask, what is the use of this? Why are you doing this exercise? Guys, understand. It should match. We know we are following what entry? Double entry method, right? So double entry method of bookkeeping. So debit should always equal to what? Credit. Debit should always equal to what? Credit. Whether it is there or not. By preparing trial balance, we can come to know. If it is not matching, then I will know that, I'll come to know that, yes, somewhere I made a mistake. Where I made, which entry has been missed out, where any mistakes in the numbers or any entry has been missed out totally. All those things I can find out by preparing what? Trial balance. So getting it, guys, why we are preparing trial balance and how we have to prepare the trial balance. It is very simple. From the ledger, you have to put it in one place, debits and credit, whatever the balances it has, put on the debit balances and credit balances and total it up, and that is your trial balance. That's it. All right. Now, we were talking about post-closing trial balance. No, I have given here. What is it? Post-closing trial balance is listing of what? Balance sheet accounts containing non-zero balances at the end of a reporting period. All right. Basically, what happens? It has only which ka balances? Balance sheet ka balances, which means all your assets and liabilities. Only assets and liabilities ka items will be appearing in this trial balance, because you have closed your books, guys. You have transferred all your revenue items to where? P&L account. All right. So that is the reason post-closing will have only what? Balance sheet items. All right. See here, the post-closing trial balance is used to verify what? Total of all debit balance equal to total of all credit balances. All right. Next one, post-closing trial balance contains what? No revenue, expense, gain, loss or summary account balances. It won't have. Why? Because these are all temporary accounts. We have transferred it to what? Your trading and P&L account, and it forms part of what? Your reserves and surplus. Correct? It goes directly to your balance sheet. So usually post-closing trial balance will not have balances from your nominal accounts, I can say. It will not have your nominal account ka balances in your post-closing trial balance. Why? Because we will prepare only the balance sheet items ka balances, assets and liabilities. If at all you find any revenue items, or if at all you find any nominal accounts appearing in your post-closing, then it may be related to your next accounting period, which means you may paid in advance. All right. You may pay rent paid in advance, salary paid in advance. It will still appear in your trial balance. Why? Because that related to what? Next period. All right, that relates to your next period. So that is the reason it was appearing in your post-closing trial balance. So you have three types: adjusted, unadjusted and post-closing. Unadjusted means without any adjustments. First raw information preparation of trial balance is called as unadjusted. After finding out all your adjusting entries, passing everything, then if you prepare, then that is called adjusted trial balance. Post-closing, it has only the balance sheet item ka balances. Only your assets and liability ka balances. All your nominal account ka balances has been already transferred to your reserves and surplus. That is called post-closing trial balance. Here I have given a formula. See here, not formula, format. See here, cash, accounts receivable, inventory, fixed assets, payable, accrued expenses, retained earnings and common stock. Guys, if you see in our previous trial balance, you wouldn't have seen this word. Retained earnings you wouldn't have seen. P&L you wouldn't have seen. All right, if you go back and you can check in our example, we wouldn't have seen P&L. Why? Because P&L will come. This retained earnings will come. All right, P&L or retained earnings will come only after preparation of what? your trading and P&L account. You're getting it. So this one is what, after doing all those things, you will prepare one trial balance just to see to it whether your debits and credits are matching. That is called post-closing trial balance. All right. I hope you understood trial balance, guys. I wish